Hello guys, welcome to welcome to Bearbull. Guys, in this video we'll be talking about the concept of double taxation. What is double taxation and what is a typical example of double taxation? So remember that double taxation is when the same amount of income, when you take that a dollar of income and that dollar of income is taxed twice. That is called double taxation. Whether that dollar is taxed because of jurisdictional issues or that is taxed because of the income tax law which is operational and same income is taxed twice, that is called double taxation. A typical example is corporate income. Companies are separate legal entity, as you know, and but shareholders are the owners of those companies. Now let's suppose a company has made a profit of $1,000. Now the company will have to pay tax on those $1,000, and let's suppose the tax percentage is $300, 30%. Now the 30% of $1,000 is 300. This means that out of the $1,000 of income, the company has paid tax of $300. Now the remaining income, which is $700, is already taxed, as you can see, because the income was 1,000 and that was taxed, and the leftover income is $700. Now suppose that the shareholders get the dividend out of that $700, and when the shareholders will file their income tax returns and they will declare that they received a dividend from the company. Let's suppose if we suppose that, for the sake of simplicity, that only one shareholder was there in the company and he received the dividend of the $700, that is after tax income from the company. Now when the individual will file his income tax return, he will have to declare that $700 in his return, and ultimately that income of $700 in the income tax return of that particular individual will also be taxed at the rate of tax which is applicable to the individuals. Now as we can see that out of the $1,000 of income, that income was taxed twice. First at the corporate tax rate of 30%, and then when the individual, let's suppose the individual tax rate was 10%, and he received the dividends of $700, and 10% of that becomes $70. So the same 1,000 income was taxed twice. First at the 30% rate of corporate tax, and then the 10% rate of individual taxation rate. So that is a bit unfair, as you can see. Because same income is being taxed twice. But of course the opponents say that that's not the case. Had the individual earned that $1,000 of income in a sole proprietorship, okay, there was no company in place, then he would have only been liable to pay tax only once at the rate of 10% of which was the tax rate of the individual. But since they say that companies are separate legal entities, okay, companies are separate legal entities. They are artificial persons. They can enter into contracts just like individuals. They can borrow money just like individuals, and they can initiate litigation against others. They can sue and be sued. So they have all the rights of being an individual. So they need to be taxed separately. This is the viewpoint of the opponents, who say that dividend income is not taxed twice. Rather, companies are separate legal entities and they need to pay their taxes. And then individuals, of course, if they have earned some income from the dividend in the form of dividends, then they need to pay their taxes also. But that's a debatable point. I personally feel that dividend income is being taxed twice, especially if you do not get credit for the tax already paid at the corporate level. So yeah, dividend is essentially an example of double taxation. But many jurisdictions, they try to avoid it by keeping the taxation rate of dividend as low as possible, in order to encourage investors to encourage in the corporate structure, because corporate structure is more organized, it has more financing, and they invest in mega projects which create employment. So dividend taxation is kept minimum in most of the jurisdictions in order to avoid this disincentive. I hope this video clarified your concept about double taxation, what double taxation is, a practical example of double taxation, and how it can be avoided, and how different income tax jurisdictions take steps to minimize this double taxation, and what opponents believe that why it's not double taxation. Thanks for watching. Do subscribe for more.